I'm your host Himakshi Bahugna, and on the next half an hour I'll be taking up all your stock related queries. So don't forget to WhatsApp us or call us directly. The numbers are there flashing on your screens right now, viewers. And on the show I'm being joined by Vishnu Kant Upadhyay, AVP Research and Advisory, Master Capital Services on the technicals. Welcome to the show, Vishnu. And our fundamental guest will be joining us very shortly, but let's just proceed further with the show. So first query is written to us by Shubhash. He hails from Haryana and he's asking for stock recommendations in the auto space for medium term. So Vishnu, if you could just enlighten us regarding the space in particular, how are you viewing it technically, and also what suggestions do you have?
Definitely. First of all, good evening, Himakshi, and thank you for getting me in the show. So in auto space, I feel Bajaj Auto looks very good. It's after falling around 40% from its all-time high, prices are now rebounding. And in today's trading session, or I would say a few days back, we have seen breakout from the falling trend line resistance, and I would say it's an inverse head and shoulder kind of pattern. Apart from that, prices are currently trading above its all key moving averages, be it 50 and 100 and 200. So it further induces the buying strength in the prices. So I would say prices are now looking to reach towards 10,000 and 10,500, while on the lower side, 8,400 will act as a immediate support. So you can use that level as a support. Sorry, stop loss.
Understood. Thank you so much, Vishnu, for that. Now we're being joined by our first caller on the show from Noida. Hi, Amol. Good evening. Amol, are you there on the phone line with us?
Yeah.
Yes, Amol. Please go ahead with the query.
Yeah, actually, I'm holding 2,200 shares of NMDC.
Okay.
And my buying price is 73 rupees 57.
Right.
And I could see that 73.6 is a strong resistance for the stock. And today the stock was up around 4.5% in the trade, and with a considerable volume.
Yes.
So I just want to know whether it will break this time. Can it break the 73.6 level, and can I see like 77 or 80 levels in the next 2 days?
Okay, so are you looking from a trading perspective?
Right.
Understood. Okay, so Vishnu, from a trading perspective, are you seeing NMDC crossing the threshold of 73.57, which apparently, Amol bought the shares at, or what sort of levels probably you are anticipating in the next, 2 to 3 days?
Actually, so we have seen a very good amount of volume in today's trading session, and he said rightly that the prices were up around 4.5% in today's trading session. So I believe this buying tendency is likely to remain intact, and I'm expecting prices should reach towards 78, 79 in days to come. I mean, this week we can see prices touching that level, so he should hold your position.
Okay. Thank you so much for that, because our experts are saying that they can see the stock reaching 78 levels also. Now, we are being joined by Siddharth on the phone line from Hyderabad. Hi, Siddharth. Good evening.
Good evening.
Yes, how can I help you today? Siddharth, I'm afraid that you're not audible properly.
Yes, madam.
Yes, please go ahead with the query. Yeah.
I have purchased Chambal fertilizers for 25 shares at 564, madam.
Okay.
It has 3 months.
I think it's a very bad line there. There is a lot of glitches, but we've understood your query, Siddharth. So Vishnu, Siddharth has bought 25 shares of Chambal fertilizers at 564 rupees. He's looking for a short-term view on the counter. So how are you viewing Chambal fertilizers from a technical standpoint?
Well, so prices are currently trading up very close to its higher range value. It's a very stiff resistance around 570, 572. So I believe if prices crosses that level, 572, the next target will be 630, 650 on the card. But as long as prices are trading below 572, so I believe he should exit from the positions, because in the downside, I'm expecting again prices could reach towards 540.
Understood. Thank you so much for that. And with that, we are also being joined by our fundamental guest, Mahesh M. Ocha joins us. Welcome to the show, Mahesh.
Good evening.
Good evening. So, Mahesh, we were discussing about Chambal fertilizers, although the viewer has asked us about a short-term outlook on it, but still I'd like to understand in the fertilizer space, how are you viewing this counter particularly, and what's your sense on the space also?
I think Chambal is a fundamental very good counter. And yes, technically it's not giving much breakout, but yes, it has potential of 640, 650 range at least. So I think if anyone holding and with horizon more than 12 months, they can hold further for a 640, 50 range. But yes, in near term, yeah, it may be consolidated more.
Okay, okay. Thank you so much for that. Now let's go across to Kumar, who is joining us on the phone line from Chennai. Hi Kumar, good evening.
Very good evening.
Yes, how can I help you today? I think the line today is pretty much disruptive. Again, I'm not able to hear him properly, but we have his query. Ambuja Cement is the counter. He's bought 140 shares. He's bought it at 520 rupees and looking for a short-term outlook on it. So coming directly to you, Vishnu, Ambuja Cements, what are the charts looking like? Is it positive?
Basically, it is currently struggling very close to its 200-day exponential moving average, aligning around 560. So purely technical, if I say prices, if holds that level 560, so we can expect prices to reach towards 596. So I would say keep this level in mind, 560, and use this level as a stop loss and hold your positions for the target of 595.
Okay, understood. And just a quick disclaimer for our viewers there, NDTV is a subsidiary of AMG Media Networks, which is an Adani Group company, and the channel you're watching currently. With that, let's go across to another caller who's joining us from Kolkata. Hi Ashish, namaste.
हेलो हेलो गुड इवनिंग
Good evening.
एक्चुअली मैं कोल इंडिया का शेयर में इंट्राडे कर रहा था
जी.
तभी मेरा 1381 क्वांटिटी ऑफ शेयर था.
Yeah.
तभी कोल इंडिया का 403 रुपीस चल रहा था 403.42 समथिंग. तो खरीदारी किया. तो अभी इंट्राडे में नेगेटिव में जाने के मेरा 2 महीने से नेगेटिव में पोर्टफोलियो रन कर रहा है.
हाँ.
तो मेरा फर्स्ट टारगेट है 427 एंड सेकेंड टारगेट है 517. तो मैं कितना दिन तक इसको होल्ड करूं?
ओके ओके. सो यू आशीष, आप जो है शॉर्ट टर्म इन्वेस्टर है ना?
हाँ जी, मैं इंट्राडे ट्रेडर हूँ.
इंट्राडे ट्रेडिंग. ओके. सो बेसिकली आशीष, हम लोग अपने शो पे मिनिमम कोई जो स्टॉक में इन्वेस्ट करता है 3 से 6 महीने का एक आउटलुक रखते हैं, 1 से 3 महीने का भी. जनरली हम इंट्राडे को उतना केटर नहीं करते हैं, बट क्योंकि आपकी क्वेरी है तो मैं ज़रूर अपने टेक्निकल एक्सपर्ट के पास उनका एडवाइस लूँगी. लेकिन मैं कोशिश करूँगी कि अगली बार से अगर आप कोई भी अपनी समस्या लेके आते हैं तो वो जो काउंटर है उसका टाइम होराइजन कम से कम 3 महीने का तो आप मान के चलिए रखिएगा. एंड कमिंग टू यू विष्णु ऑन दिस वन, कोल इंडिया, since he has incurred a loss on it because he was trading intraday, but what's your sense holistically, and what are the charts looking like?
Well, so in today's trading session, we saw that prices opened with a gap up, but it failed to hold on to gains, and with a minor gain of around 0.6%, prices ended the session, right? So basically, prices are currently trading a very close to its 200-day exponential moving average, and it is respecting this level since long. So it has been a very languish, counter for a long, and I'm not expecting very much gain in this counter. 400 is a very stiff resistance. If prices anyhow moves above that level, then we can expect rally in the prices around 450. But as is a intraday trader mentioned, so I would say for intraday, you just keep a stop loss below 375. If prices falls below that level, definitely you have to get exit from the market.
Right, right. Thank you so much for that. And with that, we are being joined by Mahendra on the phone line from Jaipur. Hi, Mahendra. Good evening.
Yeah, ma'am. Good evening. My question is on the Ease My Trip. I purchased 11,500 quantity at a rate of 11.59. I'm currently incurring loss of almost 27%. So I just wanted to have the technical aspect on this, whether should I exit, hold, or average at the current level?
Understood. So, Vishnu, since Mahendra is incurring a loss of almost 37,000 there, he bought it at 11.5 levels. Currently, it has dropped down to 8.42. So, are you seeing any more correction in the near term, or is there any sort of consolidation that you're seeing or anticipating on the charts there?
See, I'm not, seeing any kind of positivity in this counter. It's continuously falling, and it's a very strong bearish, sentiments. Today, it's a very bearish strong sentiments. So I would say, getting exit from this counter would be a very prudent strategy to be played with. If any levels you find around 9.35, definitely you have to get exit from the market.
Okay, okay. And Mahesh, since Vishnu has pointed it out as a strong bearish side that he's seeing in the counter, so is it the same picture for a long-term perspective as well?
See, the management is trying to reshuffle the business. So I think if they can wait further for the few more months, 3 to 6 months, then they can hold further. Apart from that, if your horizon is less than 1 month or if for 43 or 30, 40 days, then you can exit on any higher level. But if you are holding more than 6 month view, then you can hold further.
Understood. So if you're planning to hold the counter for more than 6 months, then you can probably stay put with the Ease My Trip. And with that, we're being joined by Mr. Murli on the phone line. Hi, Mr. Murli. Good evening.
Good evening, ma'am. My query is on PT Engineering.
Yeah.
I bought 300 shares at the rate of 1271.10. I am at a loss of about more than a lakh, about 30%.
Yeah.
I am willing to wait for long term. So, what are the prospects, or do you suggest any other switchover?
Okay, okay, understood. Mahesh, I'd like to come to you on this. Since Mr. Murli is incurring a loss also of over 1 lakh rupees with PT Engineering, but fundamentally, if we look at the counter, how strong is it? How's the order book looking like? And how are the valuations as well?
I think fundamentals of the company are good. They can, if your horizon is more than 6 to 12 months, then you can hold for that. I think stock can read it from these level. I think 1,250, 1,300 level could become easily in stocks. But yes, you have to wait. You have to give some more time in stocks. From my view, you can hold, and if you want to add in any dip you can add further.
Okay, so it's a buying on dip opportunity. So Vishnu, what are the levels, probably for somebody who wants to accumulate more, what levels should they be eyeing?
Basically, PT Engineering, after witnessing a very sharp fall from the high of around 1500, so it's currently in a consolidation phase, and it is very close to trading. It's a rising trend line support, which aligns around 890. So as long as prices are trading above this level, I would say wait, because I'm expecting prices to gain towards 995.
Understood, understood. Thank you so much for that. Now let's go across to Ram, who is joining us on the phone line from Vijayawada. Hi Ram, good evening.
Hi ma'am.
Yes.
Good evening.
Yeah. Please go ahead with the query, Ram. Yeah.
Yeah, I have IRCTC. I'm holding for last more than 1.5 years.
Yeah.
And the average is 650, 200 stocks. So what is the further to hold or to sell? Because
and are you a long-term investor, Ram?
Yeah, I'm long-term investor.
Okay. So Mahesh, I'd come to you on it. So IRCTC and the counters similar to it. So do you anticipate any sort of multi-bagger returns from such counters, and what's your fundamental take on it?
I'm not looking for a multi-bagger return in this type of counter, but yes, I think 790, 795 level could become in 3 to 6 month horizon easily. And after that, if they are sustaining above that, we can see up to 850, 875 level. From current perspective, hold with target minimum 790, 95.
So much for that. Now let's quickly go across to Man Singh, who's joining us on the phone line from Kurnool. Hi, Man Singh. Good evening.
Hi, Makshi. Very good evening. This is Man Singh from Kurnool. I have one query. I already invested in Deepak Nitrite. I am holding nearly around 60 shares. Average price 810 rupees.
Okay.
Should I invested in this counter, or should I book loss and I choose one company that is KP Energy Limited? Is it the right time to enter into that KP Energy Limited, or any other stock which the analyst can recommend or suggest to recover my losses? I can hold for 3 to 5 years.
Okay. And Man Singh, for how long are you planning to hold the counter?
Oh, I can hold 3 to 5 years. I am holding this Deepak Nitrite from last 3 years.
Okay. And you're incurring a loss of almost, if you could just tell us?
All right.
Okay, till the time he, he comes back with the amount of the loss that he's incurring at the moment with Deepak Nitrite. Mahesh, I'd like to come to you. Is it advisable for Man Singh to stay invested in it, or should he switch his positions to probably a KP Energy or any other counter that you might recommend?
I think if anyone holding the Deepak Nitrite in longer term horizon, further they can hold. Yes, definitely challenge are there. But yes, the company like Deepak Nitrite can be overcome in near term. I think at least 2100, 2200 level could become. But yes, some consolidation we can see in this counter as some news are not positive for counter. Yes, from KPEL perspective, you can start staggered buying on these levels. Yes, we can see some more upside from that level. One more counter, if you are looking for a longer term perspective, I think Concor could be a good pick on these level. And apart from Concor, Western Carrier can be added in your portfolio.
Okay. Thank you so much for that. And I would also like to take Vishnu's view on it. Vishnu, what suggestion do you have for Man Singh, who's probably incurring a loss with, his current investment, and he wants to switch positions to probably a KP Energy or the counters that Mahesh has invested in?
So for KP Energy, I would say prices are currently trading a very on good support area. So this is a very good levels from a risk reward point of the view, because on a downside prices have a very limited downfall of around 4 to 5% from the present levels, while on the higher side prices has potential to reach towards 550 or 520 in days to come. So I would say KP Energy would be a very right pick to stay with, while on Deepak Nitrite is not looking a very much positive. I would say if you find any rise close to 1800, then definitely you have to think to get exit from the market.
Understood. Thank you so much for that. Now let's go across to Pawan, who is joining us on the phone line from Bengaluru. Hi Pawan, good evening.
Hello ma'am, good evening ma'am.
Yes, please go ahead with the query.
Ma'am, my query is regarding the Paras Defense. Is it good to buy at this point of time at 669?
Yeah.
I am willing to hold for 6 months to a year. Would it reach the 800 levels?
Understood. So Vishnu, without wasting much time, I'd come to you. Paras Defense, which is currently trading at 670 levels and was also up in trade today over 1%. So is it advisable for somebody who wants to take fresh positions in it for, like, let's say 6 to 7 months time frame, to probably take fresh positions at these levels? And also, do you see it crossing the 800 mark?
Yeah, definitely. After witnessing a fall of around 33% from its recent high, 937, 940, prices have started to form a higher bottom kind of pattern. So we can also consider this pattern as a W kind of pattern. And the good point is that prices took this U-turn from the proximity of 200-day exponential moving average. So definitely it's looking quite good, and I'm expecting prices to approach towards 790, 795 in this to.
Understood. Thank you so much for that. Now let's quickly go across to Dheeraj, who is joining us from Hyderabad. Hi Dheeraj, good evening.
Hi ma'am, good evening.
Yes, how can I help you today?
Ma'am, my query is regarding Zinka Logistics. I purchased 740 shares of Zinka Logistics at 640 rupees, ma'am.
Yeah.
So many mutual fund houses and so many FIs have added this stock, ma'am. So what sort of targets can I expect, and what should be the stop loss for this particular stock, ma'am?
Okay, understood. So Vishnu, again coming to you, since he bought it at 642 and it has dropped down to 612, and if we can look at the charts as well, it was down in trade today over 3%. Currently, following a downward trajectory there, but what suggestion do you have for Dheeraj? Should he be booking his losses at this particular time, or what he should be doing?
So basically, this Jinka logistic is, trading in a very strong uptrend. Yes, no doubt, it's a very highly volatile counter. And in last couple of days, we have seen a very good amount of volatility in the stock. But yes, still structure is a very bullish. And I will say any fall close to 567, and there you can also do averaging in your portfolio. So 567 will be a very good levels to accumulate their stocks. While on the higher side, I'm expecting 710, 720 will be on card very soon.
Okay. Thank you so much for that. And with that, we have another WhatsApp query. So Srinivas from Hyderabad holds 12,000 shares of Railtel. He bought it at 366 rupees, and he is sitting on a loss of nearly 1.7 lakh rupees there. He's looking for a long-term view on the counter. So Mahesh, considering that he is, sitting on a loss, and that too a significant loss, is it advisable for him to, stay put with this investment of his, or should he be, probably partially booking his losses at this particular time?
No, I think he can hold further. Railway stocks is poised for some more upside and growth. I think 420 level could become in the 6 to 9 month horizon or a 12-month horizon. So from current view, they can hold further. As is quantity high on higher level, they can reduce the some quantity, so they can leverage their position. But yes, from current view, they can hold further.
Okay. And I'd also like to come to you, Vishnu, since the stock, is in a upward trend there, but really, how are you viewing it technically?
So basically, in last couple of days, prices just bounced back from the low of around 328. It tried to calm down some bearish sentiment, but still on a graph structure is still bearish. And I would say keep one level in mind, that is a 375. If prices cross that level, then definitely you can buy the stock, or you can add more position in your portfolio. But as long as it is trading below 375, technically it is not looking good.
Okay. Thank you so much for that. And now we have another WhatsApp query, which is written to us by Jai Kishan from Gwalior. He holds 1,000 shares of Dwarkesh Sugar. He bought it at 200 rupee a piece. Currently sitting on a significant loss of almost 1.5 lakh rupees there. Looking for a long-term view on the counter. Mahesh, coming to you, are you having any coverage on Dwarkesh Sugar?
No, we don't have any coverage on Dwarkesh Sugar, but yes, as per technical move, for today's move, yes, we can see some more upside that could be near 58, 60 level. So from current perspective, we can expect some more upside from this counter.
Okay. Rightly pointed out, because the sugar stocks were rallying today on the back of the ethanol. Government has given a green signal for production of ethanol, production. But coming to you, Vishnu, is that the only, like for somebody who has invested in it, so have they reached the elevated levels, and should they be booking their profits as of now, or what's your sense really?
So basically, absolutely, you mentioned that today's rally in entire sugar space has been driven by this ethanol production news, right? So basically, Dwarkesh, if we talk about Dwarkesh sugar, so technically structure is still bearish because it's a news-driven rally in the market. And looking at the chart, prices are still trading below. It's a 200-day exponential moving average. So I would say if he, wants to be in a sugar space, then EID Perry is looking quite good compared to Darkish.
Okay. Thank you so much for that. And with that, I'm afraid that we are running short of time on this edition of Ask Profit. But thank you so much, Mahesh and Vishnu, for being there and so patiently answering all the queries. Thank you so much. And with that, viewers, it's a wrap on this edition of Ask Profit. But please don't go anywhere, as there's Profit 360 lined up ahead on the other side of the break.
Tech has changed, so should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed, so should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Benchmarks reverse gains on expiry volatility. Nifty ends below 24,600 while Sensex finishes over 200 points lower. Most sectors end higher with FMCG as the top gainer. Manoj Jarange Patil ends his hunger strike as the Maharashtra government agrees to his demand of implementing the Hyderabad Gazette identifying Marathas as belonging to the Kunbi peasant community. Not black gold, but digital diamonds or semiconductor chips are the way to go for India, says Prime Minister Modi. The first Made in India chip is presented by IT Minister Ashwini Vaishnav at the Semicon India event in Delhi. GST Council is set to meet on the 3rd and the 4th of September. The Council will decide on Centre's proposal to slash GST rates on over 150 items in a move aimed at easing the tax burden. Floodwater enters Delhi NCR homes as Yamuna River's water level crosses the danger mark following incessant rainfall overnight. Schools have been ordered to remain shut as a precautionary measure. Death toll from Afghanistan earthquake climbs to over 1,400, making it one of the deadliest earthquakes to hit the country. Leaves over 3,000 people injured so far. Hello and welcome. A warm good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be taking you through all the updates, whether it's national, international or related to the market. So stay tuned. Let's begin with seeing how the markets fare today. They ended a choppy day of trade in the red. Nifty declined to end the day below 24,600 and the Sensex also shed over 180 points. More sectors ended the day in the green than in the red, with the sectoral picture looking largely mixed with FMCG, defense and media leading the gains. Let's go across to my colleague Puneet, who is joining us to wrap the day's market action.
Well, it's been a day where we've seen selling come across over the last hour and a half or so, and that's essentially dragged the Nifty in the red. At one point in time, we were up almost 70 to 80 points on the Nifty, but we've failed to maintain 24,600 as the key level and seen selling across the board post that. We've ended in the red, and largely having a flat to a negative bias on the Nifty, but the broader markets did outperform essentially the benchmark index today, while giving up its gains as well. We've seen, the top Nifty losers be largely Mahindra and Mahindra, and we saw that clarification of the news flow come in terms of GST, which could impact the luxury EVs. And from then on, M&M couldn't recover at any point of time. We've also seen Dr. Reddy's also be another top loser for the Nifty today. When you look at some other key aspects, the Nifty FMCG was one of the indexes that was the top gainer for today, that was led by Dabur amongst other stocks. But overall, sectors such as sugar dominated the news flow from the start of the day. Government allowing increase in ethanol production or no restriction essentially on ethanol production, and that drove sugar stocks by roughly 10 to 13%, including Balrampur Chini as well as Sri Renuka Sugar. In terms of mid-cap and the small caps, those did end with a slight bias towards the green, but did give up all its gains. Both indexes were up roughly 0.7 to 0.8% in trade today as well. We've seen in terms of the sector indices, the Nifty Metal, Realty, PSU Bank gained for the second consecutive row, while sectors like Pharma were under pressure today as well. In terms of stocks, I mentioned sugar stocks were impacted positively. We also saw some positive momentum in the tire stocks like Seat, Apollo Tires amongst others, and some buying was also seen in the textile companies as well. But overall, it will be important if we can maintain 24,500 as the support for tomorrow. We had the first expiry on Tuesday for the Nifty today, and the bottoming out essentially will be happening for the Nifty at 24,400, but that remains to be one of the key levels to watch out for, at least as we go into September.
And India has sought a dialogue with the US over 50% tariffs levied on copper at WTO. My colleague Rishabh now joins us with the latest details on this development.
Right, Malika, what we've seen happening and playing out at the WTO is the fact that India has sought additional consultations with the US over these 50% copper tariffs that have been in play for a while now. India has maintained its stance with the fact that even though the US says that these tariffs have been imposed as a matter of national security, India has said that these are still safeguard measures and these are still disguised under the garb of these being a matter of security when there is no such case that the US can prove. So that is the stance that India has taken. India has said that a mutually convenient date should be set, and that is just how the WTO process goes. But to add a little more context, the point here is that India has sought also previously these consultations over the steel and aluminum tariffs that the US had imposed, but the US has not cooperated in that sense. It has not agreed to talk with Indian officials at the WTO with regards to this, because they continue to impose these tariffs on, despite their sort of legal status being challenged in the US also. The US has very little footing in terms of wanting to uphold the actual legality of these tariffs. We've seen court also ruled that these continue to be most of these tariffs continue to be illegal, and they will still be in effect till October, till the time the Trump administration responds officially. So we've seen this process play out over steel and aluminum. Now it's copper, and we will continue to track what sort of progress these consultations at the WTO make.
Right, Rishabh. Thank you so much for that. Definitely, tariffs have tense relations, but we'll have to see what development comes out of these WTO talks. But moving on, viewers, the Securities and Exchange Board of India has approved the IPO plans of 13 companies, including well-known names like Boats Parent Company, Imagine Marketing, Urban Company, and as well as Juniper Green Energy. The market regulator issued its so-called observation letter to these companies, which in SEBI parlance means an approval. My colleague Vansh now joins us with the key highlights of all these 13 IPOs.
So SEBI has given its approval to 13 companies to launch their IPOs, including key names like Urban Company, Boat and Juniper Energy. Now, if I talk about the details, let me start off with Urban Company. Now, the company has filed draft papers for an issue worth about 1900 odd crores in April. Now, if I talk about the details of the issue, it would be a combination of fresh issue of about 429 odd crores, and the remaining would be offer for sale by the existing investors. Second on the list is Juniper Green Energy. Now, the company is an independent renewable energy power producer in India, and they are focused on the development, construction and operations of utility scale solar, wind, solar and hybrid renewable energy projects. Now, the company also plans to raise about 3,000 odd crore via fresh issue. So lastly, the IPO applications of at least 53 companies are with SEBI, and the Indian companies are increasingly eyeing their primary market as their source to raise funds. Now, this is on the back of the rising participation in interest from the investors and the growing confidence in the stock markets.
Right, Vansh, thanks for that. And moving on, viewers, Zomato is planning to reduce its commission and long-distance fees that it charges restaurant partners. While talks are on, nothing conclusive has been drawn yet. As of now, the food delivery platform levies commission ranging from 10 to 28% depending on city, restaurant, location and type of cuisine. Let's go across to my colleague Agni now for more details on what is being currently discussed and a brief comparison of Zomato's commission with Rapido. Over to you, Agni.
That's right, Malika. So first, let me take you what's happening. So Zomato is apparently in discussion with restaurant partners, representatives from restaurants across the country, and the discussions are ongoing about commission structures and long distance fee, which are likely to see a cut as restaurants mount the pressure on Zomato. Now, the discussions are across representatives across the country. Nothing has been finalized yet, and sources tell us that CEO Deepinder Goyal is said to be directly involved in this negotiations. Now, to give you some context, how much do restaurants dish out when you order a dish from them? So commissions range from 10 to 28%. Nothing's fixed. There are also payment gateway charges and GST charges that a restaurant ends up having to pay. And average order value and number of orders also matter for commission. Now, restaurants' brand identity is also subject to how much the commission are affected. And Zomato claims that it caps these commissions at 30%, but other charges take the total amount beyond that. This is what industry sources are telling us. Now, on Zomato's official website, the company says that it charges commissions for services such as order placement, catalog hosting, demand generation, tech infrastructure, marketing, logistics, and customer support. It also says that commission rates vary based on city and restaurant, and that commission depends on factors like location and cuisine. So the next question one needs to ask is, why is this happening now? Remember, nothing happens in its vacuum, and Zomato's discussion about commission models is happening at a time when Rapido is piloting its own food delivery. Rapido's model has onboarded restaurants with a promise of zero commission, where they only have to pay a delivery fee to the delivery partner. A restaurant on Only, which is Rapido's delivery app, will end up paying much less from its pocket as compared to Zomato. How do we know it? We did the math. Now, remember, all of this is based on indicative pricing and industry sources, so nothing can be taken to task. Standard disclaimer. So let's take a look at how the breakdown works. So on Zomato, suppose you order an item that costs 150 rupees. So a restaurant will end up paying 22% commission on that, which comes to 33 rupees or 2% gateway charges. 5% GST on the item cost and 18% GST on the commission. On top of that, if the food is being delivered to 4 and 6 kilometers, there's also a payment of long distance fee involved, which takes the overall amount that a restaurant has to dish out on top of the food item to 42%. But again, like we said, Zomato is saying it will cap the things at 30%. But on Rapido's platform, that is not the case. On Rapido's platform, there is just a payment gateway charge that the restaurant has to pay to the payment gateway and a standard delivery fee that it has to pay to the delivery partner. So this is how it is for something like a 40% commission on Zomato, which again will be capped at 30%. You end up paying only up to 19% on Rapido's platform. So there's a huge margin difference, and this is what is likely to be prompting the shift in Zomato's perspective, where it's discussing commission models.
Right, Agni, thank you so much for bringing us that comparison and a lot more details. But viewers, let's quickly take a look at how the US market is trading. Wall Street is trading lower on the back of tariff moves and rising bond yields. The Dow Jones shed over 300 points, while the S&P 500 and Nasdaq dropped close to 1%. Markets continue to digest the implications of Friday's ruling by the U.S. Court of Appeals for the Federal Circuit, which held that Trump had overreached in using national emergencies to justify sweeping tariff hikes. Investors are also eyeing a surge in bond yields to start in September. The 10-year Treasury yield jumped to 4.29%, while the 30-year yield topped 4.98%. And Prime Minister Narendra Modi received India's first made-in-India semiconductor chip at the launch of Semicon India 2025 in New Delhi. Union IT Minister Ashwini Vaishnav presented the Vikram 32-bit processor built by ISRO's Semiconductor Lab along with test chips for four projects. Now, at the same event, Prime Minister Narendra Modi said the global chip market is heading towards $1 trillion and India is set to play a bigger role. With $18 billion invested in 10 projects under the India Semiconductor Vision, he said the country is on track to become a semiconductor hub.
ये चिप भले छोटी सी है, लेकिन इसमें दुनिया की प्रगति को बड़ी गति देने की ताकत है। और इसलिए ही आज सेमीकंडक्टर्स का ग्लोबल मार्केट $600 बिलियन तक पहुंच रहा है और अगले कुछ साल में ये $1 ट्रिलियन को भी पार कर जाएगा। और मुझे विश्वास है भारत जिस तेजी से सेमीकंडक्टर सेक्टर में आगे बढ़ रहा है, इस $1 ट्रिलियन मार्केट शेयर में एक अहम हिस्सा भारत का रहने वाला है। कुल मिलाकर सेमीकंडक्टर के 10 प्रोजेक्ट्स में $18 बिलियन यानी 1.5 लाख करोड़ रुपए से अधिक का इन्वेस्टमेंट हो रहा है।
In fact, my colleague Rishabh Bhatnagar attended the event and spoke exclusively with I&B Minister Ashwini Vaishnav on India's first fully indigenous microchip, Vikram, unveiled at Semicon India 2025.
See, one good thing is world's confidence on India's semiconductor ecosystem is so clearly visible. This time we have almost 500 global leaders and executives coming from more than 40 or more than 45 countries. And we have practically every large ecosystem player present here. All the equipment manufacturers are here. ASML also is present this time. And the momentum which has got generated in the last 4 years is quite visible.
Sir, digital diamonds is what the Prime Minister said.
How are you? Good to see you again.
Yeah. Digital diamonds is what the Prime Minister said. So what are some bold innovations that you're looking forward to this time around?
See, this is the time when we are setting the foundation of this industry. And this is a foundational industry, as Honorable PM said. Like steel is foundational for entire infrastructure. For digital infrastructure, semiconductors are foundational. So that's why our first focus is to cover all the major sectors, which we have covered: automotive, telecom, power electronics, defense, strategic, consumer electronics. The ecosystem, which is like more than 500 chemicals and 50 odd gases, they are all here now. Today we had Merck getting into a joint venture with one of the Indian partners. So those things are there. Lam Research investing more than $1 billion. Celesta Capital has collected almost $1 billion kind of fund. And we have the first made in India chip coming from this very place, CG Semi.
And Rishabh also spoke to MeitY Secretary S. Krishnan about ISM 2.0, what the focus will be, and how smaller domestic firms will be able to benefit out of this incentive. Let's listen in.
One, as the Minister already pointed out, in ISM 2.0, the way we are working on it right now, the existing areas of focus remain, which is, establishing fabs and establishing ATMP and OSAT facilities. In addition to that, we will be looking at what we can do on the ancillary industries which make up part of the ecosystem. This includes companies which manufacture semiconductor equipment, includes companies which manufacture various materials, provide the chemicals, provide the gases and all other requirements, plus the testing services and so on. So the entire ecosystem will get covered as part of the ISM 2.0. Now, some of the firms which manufacture these will be necessarily small and medium enterprises, so they will get some of the benefits of this. So that will be something which will benefit all industries, including MSMEs.
So just a little bit on the size of the layout. Given that ISM 1 was more about a foundational industry being laid out, this one is building on that foundation. So will we see a larger outlay or a smaller outlay? Because there seems to be some sort of a confusion there.
That is something which we will have to discuss the details with the Ministry of Finance. They've indicated that further discussions on that aspect are needed. So it will be difficult right now to outline what is needed, but I think the scale of ambition has been laid out by the Honorable Prime Minister today in his address, and therefore we will have to address all of those issues where we have an ambition to reach a particular level.
And in the run-up to the two-day GST Council meeting, officials from centre and states are meeting today to set the tone for what's being called a landmark tax reform. Rate cuts are on the table for over 150 goods and services, including daily use items, medicines, cars, and even insurance. If approved, the changes could take effect around September 22nd. My colleague Shrimi now joins us to tell us more on all-powerful Council's big bang agenda.
Well, absolutely action-packed agenda, as the key focus of this massive GST revamp is the daily use item. Right from your ghee to butter to toothpaste, your shampoo, paneer, namkeen, parothe, milk powder, you actually name it, which is currently in the 12 and 18%, could come down to the 5% slab. In fact, all your medicines, the pharmaceutical drugs, your medical equipments, your BP machine could come under the 5% bracket as per the current proposal. Cement, again, a very important item, currently attract 28% GST, maybe slashed to 18%, and that is something could lower your housing and infra cost. Now, small hybrid cars below 1200 cc's, of course, if you're planning to buy, car, you could see GST slash from current 28% plus cess to just 18%. Similarly, your motorbikes below 350cc maybe benefit from the lower GST rate, as it could also go to the 18% bracket. In fact, the indication coming for the tractors also, for buses also, it all could go to the lower bracket of GST. Now, life and health insurance premium may be fully exempted from GST, a long-standing demand and going to ease the financial burden massively on individual, on policy holders. That could also, see light of the day. GST Council is also expected to address the services, which is currently, spread across 12, 18 and 28%. For example, hotel rooms priced up to 7,500 are taxed at 12%. If you go above that, it will, charge 18%. Similarly, the business class air travel and the economic class, they have different tax slabs. Now, the proposed changes aim to bring consistency and to remove all sort of anomalies, even in the services sector. On the other side of the spectrum, of course, you have a special 40% GST rate which is being proposed for all sort of high-end and thin goods, including luxury cars, sedans, and mid-size SUVs, motorbikes above 350cc, carbonated beverages, as well as the tobacco, cigarettes, and all sort of chewing and tobacco items. Now, those getting expensive or not is something the suspense is still on, as it will depend on how central state going to phase out the compensation cess regime and whether it could be replaced with an additional levy or it could subsumed with the existing GST rate. That is something we need to watch out for. But for now, the final decision, of course, rests with the GST Council, which will meet in full on September 3rd and 4th at the Sushma Swaraj Bhavan, New Delhi. But one thing is clear, is what indication we are getting, that the final decision, the final reform, the GST 2.0, all those decision is expected to be implemented around September 22nd, coinciding with the Navratri festival.
And India's tourism industry is preparing for a strong revival as relations with China begin to thaw. Tour operators are estimating a 20 to 25% boost to the business from Chinese tourists. This growth is expected over the next 12 to 18 months. But how are travel agents ramping up their efforts? Well, for this answer, let's go across to my colleague Sessa.
India's tourism sector is on the cusp of a significant revival as recent diplomatic thawing between India and China promises a 25% boost in business for tour operators. Now, with the anticipated resumption of direct flights between the two nations as early as October, travel agents are proactively ramping up their efforts to attract Chinese travelers who historically constituted a substantial segment of inbound tourism for India. Now, they are engaging more proactively with their Chinese counterparts, improving digital booking systems and curating tailored travel packages to attract travelers. Now, after the resumption of e-visa issuance mid this year, tour operators say that the direct flight connectivity between India and China after 5 years will not only reduce travel time but also reduce cost. Now, since 2020, when direct flights were suspended post COVID pandemic, travelers have relied on costly, time-consuming flights, often adding 4 to 6 hours with 15 to 25% higher cost due to layovers via hubs like Hong Kong, Singapore, and Bangkok. However, easing of diplomatic ties and enhanced bilateral ties is now expected to add more international tourists from China in the coming months, translating into significant revenue for the hospitality industry.
Moving now to the Maratha reservation protest, where the hunger strike has been called off. Manoj Patil has stated that the Maharashtra government has agreed to his primary demand of implementing the Hyderabad Gazette identifying Marathas as belonging to the Kunbi peasant community. This development comes after the protest entered its 5th day. The Maharashtra cabinet held its first meeting with Manoj Patil with senior ministers including Radhakrishna Vikhe Patil, Manik Rao Kokate and Shivendra Raje Bhosle in attendance. And moving on, heavy rain is causing flooding in Gurugram. The District Disaster Management Authority reported over 100 millimeters of rain and the IMD has issued an orange alert. On top of that, rail traffic in the national capital is also disrupted as the water level at Yamuna Bridge has crossed the danger mark. Northern Railway has announced cancellations, diversions and short-term terminations for a number of local and passenger services. Several trains between Ghaziabad, Delhi Junction, New Delhi and nearby towns have been either cancelled or rerouted. My colleague Manogya from NDTV is with us now for a ground report.
The Yamuna River is flowing above the danger mark in most of the areas in Delhi, from the old Iron Bridge surrounding areas almost. There are several kilometers of land that is already submerged in water, and that has compelled a lot of people to be shifted to safer locations. The waves that you see in river are rarely seen at this momentum, and the kind of speed that you would see in water is rarely to be seen in Yamuna, especially in Delhi, but this time is it's absolutely different from what it has been. There are multiple announcements that are being made. I have with me Harish ji. Harish ji, क्या announcement कर रहे हैं आप लोगों को सचेत करने के लिए?
मैडम, हम लोग यमुना में 3 दिन से रेगुलर अनाउंसमेंट करा रहे हैं माइक के द्वारा, और डीएमई साहब की तरफ से 25 से 30 मोटर बोट लगाई गई हैं जो राउंड द क्लॉक वर्क कर रही हैं। उसमें डाइवर्स हैं, लाइफ जैकेट्स हैं, लाइफ बॉय हैं, जो अगर कोई फंसा हो यमुना में तो उसको सुरक्षित बाहर निकाल लिया जाए।
पहले भी बाढ़ की स्थिति हुई है, इस तरह की स्थिति कब देखी है आपने? इस बार कितनी कम?
2013 में आया था इसी तरह पानी, 2010 में भी आया, 2023 में भी आया पानी, बट ठीक है, इसी लेवल, इससे ज़्यादा था लेवल उस टाइम। ऐसी कोई घबराने वाली बात।
तैयारियों में कितनी अंतर है?
मैम, तैयारियां पूरी हैं, उससे पहले से बेहतर है, पहले से और बेहतर है। जैसे कि मतलब अभी डीएमई साहब आए हैं, पहले अमोल श्रीवास्तव जी हमारे डीएम साहब, उन्होंने 25 से 30 मोटर बोट यमुना में रेगुलर ही उतारी हुई हैं। पहले से 15, 16, 18 होती थी, आज मतलब उससे भी डबल हैं बोटें।
देखिए, और नाव की संख्या बढ़ा दी गई है, बट ऑल्सो ऑन द अदर हैंड देयर आर सेवरल सेफ्टी मेजर्स दैट हैव बीन टेकन, बिकॉज ऑफ व्हिच अ लॉट ऑफ पीपल हैव बीन शिफ्टेड टू सेफर लोकेशंस, ensuring that they are not around the river banks, be it the left bank or the right bank, keeping in mind that their safety is paramount. With camera person Sachin Gupta, this is Manogya Loiwal on Yamuna River, Delhi for NDTV.
And that's all the time, viewers, we had in this edition of Profit 360. But do stay tuned to the channel as we have a lot more action-packed news lined up for you right on the other side.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights.
What about the larger view on the markets and somebody who manages oodles of money? Anish Tavakle, co-CIO Equity, ICICI Prudential Mutual Fund, Johnson, right now to try and understand or give us a sense of how are they making these money-making decisions in this quote-unquote very interesting times. Anish, thank you so much for joining in our studios. Really appreciate this.
My pleasure, Neeraj. Thanks for having me.
No, the pleasure is ours. And Anish, interesting times. They always are in the equity markets. But right now, with just the pace at which news flow seems to be developing and changing every single week, what is your overall stance on what could all of this mean for the equity market, starting off with the tariffs or with the GST reforms that have been announced?
See, both, you should see them in aggregate, right? So our view is that there is no fundamental problem in the economy, right? Fiscal deficit is in good shape, inflation is under control, current account deficit is fine, bank balance sheets are fine, corporate balance sheets are fine. So as far as the fundamentals are concerned, they're in good shape. What we need is a slight pickup in demand, right? So the only challenge is that demand needs to pick up. And I always say demand is an easy problem to solve, right? A mix of fiscal and monetary policies can lead to demand growth. And what we've seen is the RBI has already done a 50 basis point cut. That will work through the system and stimulate demand. If some GST cuts happen, that should also be stimulative to demand. So overall, our view is the economy will regain momentum. Now, how do we see tariffs in this context, right? So tariffs, you have to analyze them from two aspects. What do they do to the balance of payments? And what do they do to the overall aggregate demand in the economy? So as far as balance of payments is concerned, firstly, the current account is not in bad shape. It's anyway in good shape. There may be a slight hit you take on exports. If we think it's a temporary hit, then it's anyway not a problem. We have enough reserves to deal with any temporary issue on the balance of payments. If we think it's a longer lasting hit, a small adjustment to the rupee should bring the balance of payments where we would like it to be, right? It should lead to an adjustment to the current account. I mean, maybe we'll take a few fewer holidays, some imports will contract, and that is how the current account will adjust. So that's one side of the equation. The second is, what does it mean for total output, right? So obviously, if you have some sluggishness in exports, what you need is stronger domestic demand, right? And again, as I was saying, both domestic demand can be easily stimulated through monetary policy and fiscal policy, and a mix of both should lead to a recovery. So I'm not too worried about the tariff situation. I think actually what we need to watch is domestic home building activity, right? Frankly, if home building activity, domestic demand remains strong, which in my view relies a lot on home building activity, the economy will recover. If I may add one, interesting point on tariffs. See, actually, I sometimes recommend that we should put some export duties on stuff like pharmaceuticals and IT services. And
that's the complaint.
We can collect the tariffs rather than them. There are no supernormal profits in those industries. These industries will pass on the levy to the consumers, and the Americans will pay for it. So we can actually collect some revenue from the export duties and use it to compensate any industries that might actually be hit. There is no alternative to pharmaceuticals from India. There is no alternative to IT services from India. And these industries are not making supernormal profits, right? So if you levy a tariff, they will pass it on to the consumer.
So that is one for the playbook. Let's see how this develops. On balance, do you think the GST reset trumps the tariff impact?
See, it's very difficult to micro-model these things, right?
Broadly.
No, so there is some hit to demand from exports, and the GST is stimulative, right? Maybe it's even more stimulative than tariffs and offsets it. If it doesn't, then you give a monetary stimulus as well. So the point is, on balance, it's manageable, right? Now, whether we need to do a little more monetary action to manage it, maybe, and that would be fine.
Yeah, but markets don't seem to be entirely convinced of this story. I mean, it's taken some time for a reaction to even come to the fantastic Q1 GDP numbers. There seems to be some trepidation there. What are you looking and sensing? Are you feeling that this is an overvalued, overblown kind of market, or are you feeling more optimistic than what we are seeing reflected?
See, I don't like to give short-term views on the market nor interpret daily market movements. Frankly, one doesn't really know, right? See, what we've been saying is that while the economy is in good shape, the markets are not really cheap, right? And so in that sense, and we've had a very good run over the last 3-4 years. So if it takes a slight pause, that doesn't reflect any fundamental problem, right? It just reflects that, look, these phases happen. And
it's a phase.
Yeah. I mean, look, we have been concerned about small and mid-cap valuations, and we've been on record saying that. But we think large caps are broadly fine, and large cap is, if you take a 3-year view, you'll do okay.
The question, Anish, might be that if not due to domestic reasons, but due to global reasons, right? US markets, the question is that what steroids are the US markets on, just the way they are moving ahead. And if indeed there is a pause or a pullback, if indeed the Fed cut doesn't come in the way the market expects it to, so on and so forth, can a global growth or a global market reaction pull back markets from where they are right now and give you better entry points for the 3-year investing period as well?
That can always happen. See, the point is...
that likely?
I don't like to predict that. In the short term, how does markets react? I look at what is the earnings outlook over a 2 or 3 year period. And if it's cheap, you buy. And if it falls, it becomes cheaper, you buy more. Right?
Okay, let's talk about that.
Yeah.
What did the Q1 numbers and the commentary make you believe about the earnings outlook for the next 18 months? And just a parallel to that, can tariffs hit the earnings outlook for H2 of the current financial?
So, as I was saying, right, if you look at the overall economy, there is a slight softness in demand, which can be easily offset. Now, I don't need to read the commentary from managements. I mean, basic economics tell me that if there is a slight weakness in demand, and if you get a monetary or a fiscal stimulus, eventually the economy recovers. Right? It's difficult to say whether it recovers in 2 months or whether it recovers in 4 months, but it always does. As long as there's no fundamental supply side issue, which there isn't. So, I'm reasonably confident that the economy will regain momentum in the next, 2 quarters or so.
Basis what? The Q1 GDP has given you that confidence? You think
I wouldn't say
inflation is under
I'm
check?
reading too much into one GDP number or whatever, but I'm just saying, look, what was my interpretation of where the economy was? No supply side problems, some weakness in demand. And if you get a stimulus, you will get demand coming back. So if you expect a demand recovery, that's what the economy needs.
So what is the GST play then that you see? Are you going for those consumption, do you think? And I know I'm not talking about markets right now or those kind of bets, but as you see it from an investment perspective, are we at the start of a rally in some of these core consumption stories, including your staples, etc., which have been quite neglected?
So staples, I'm not really super confident on, because I think the problem with staples was never the economy. The problem with staples was that these companies were over-earning, their margins were too high, and they were losing to competition. Right? So it's the competitive environment that is the barrier to volume growth, not so much the economy. So staples, I would not.
Which is not something a GST rate cut can fix.
Which would not get fixed, right? The play is more in what you would call domestic cyclicals. That's automobiles, cement, some financials, and industrial and capital goods, right? Those are the segments that react when you get a stimulus, right? Those are the segments where you see the incremental demand coming in, right? So that's where we are more positive on.
And not so much your financials, or yes?
So financials we like, but I am concerned about unsecured consumer credit, and I have been. So that part I'm avoiding, right? So apart from the unsecured unsecured consumer credit part of the space, I think financials should be fine as well.
Got it. What about slightly expensive pockets, but which may get a tailwind out of demand optimism because of GST or otherwise? For example, I'm just picking a narrow band called EMS, right? 7, 8, 9 companies out there benefit out of a consumption boom, if any, but the valuations seem expensive. How do you approach some sectors like these?
To be honest, I don't understand the moat in these businesses, right? So I don't have big positions in them. Okay. See, my view is that demand growth is never enough to create value. If supply can expand in line with demand, even if demand growth is strong, there will be no supernormal profits in that industry, right? So the question, which I am not convinced of as far as EMS is concerned, is there a supply entry barrier, or is the supply like elastic enough, right? Can supply expand even faster than demand? Because if supply expands even faster than demand, you don't end up with supernormal profits.
That's true.
Right. Thank you so much for coming in today.
My pleasure. Thanks for having me.
Let's pose all of those questions to Mr. Shantanu Roy, Chairman and Managing Director, BEML. He joins us right now on the show. Mr. Roy, great having you. Thanks for joining in. We usually talk to you while you're seated next to us, so this is a different experience, but good talking to you nevertheless. From what Anushi was saying, Mr. Roy, just wondering, after what has arguably been maybe a lean August period in terms of inflows, considering the high standards that you set for the order inflows, is it the upcoming season that people should look forward to for order inflow into BEML, or are you not perturbed about order inflows because the order book itself is pretty strong?
Always a pleasure to be, talking to you.
Thank you, sir.
I'm not at all First of all, I'm not perturbed. Number two, we are very much focused on the order inflow. I mean, we are not complacent about the order book that we currently have. So the order book currently is at an all-time high, more than 16,700 crores, out of which 65% is rail and metro, 26% defense, 9% mining construction. In the current financial year, we are looking at a further order inflow, which will be at least 50 to 60% of the current order book, out of which 50% should come from rail metro, 25% each from defense and mining and construction. So order book, till today, the order this year, order inflow has been pretty good, around 3,000 crores, which is quite okay. And the coming 2 quarters, we expect some more good orders from defense, from rail and metro. Some metro tenders will be finalized in the coming 2 quarters. So order book is definitely our focus, but at the same time, our major focus is on execution. With this kind of order book, the execution has to match the order inflow as well, so as to have so that we can have a growth of minimum 20% over last year's in terms of the top line. And I'm pretty sure that as far as the bottom line is concerned, the EBITDA, the 150 basis points that we have aimed for in the current financial year, 150 basis point growth, that we should be able to achieve. So this year is entirely on execution, the challenges on execution, and how to ramp up our supply chain, how to indigenize, how to support and stabilize our indigenous supply chain. These are our major focus areas.
Roy, just the last time that we spoke, there was some talk of this large Maharashtra tender coming in on the railway side or the metro side. I mean, what's the update there? By the way, I never meant to say that you're complacent. I was just wondering that considering the past order flows, the August flows were a bit, how do I say, for lack of a better word, muted. But what happened to the Maharashtra order, Mr. Roy? We were talking about it. I don't know if something's happened there.
The Maharashtra tender, I'm sure you are referring to the Mumbai Rail Vikas Corporation, the MRVC tender for stainless steel EMUs. No, it is very much there. We expect the tender should be out any time, and it's a huge opportunity size. Only thing is that it will take some time to reach fruition, and I see a time span of around 6 to 8 months. Within which time this tender should be finalized. So it's a huge challenge. It's a big order, and it will be spread over at least 6 to 7 years. The first 2 years being on the design and the proto supply, and after that total supply period of 5 years.
Tamanna here, and obviously always a pleasure to speak with you. Just a couple of points on the Bangalore Metro project delays and the Bharat train set orders which we had seen. Are those now easing out? What is the outlook over there?
Bangalore Metro train set, there has never been a delay from BML side. We are very much on track.
Yeah, the execution, there was some execution delays. Are you looking at all of that in place?
There is no execution delay from our side as far as the Bangalore Metro is concerned.
Okay.
Bangalore Metro, there are 2 orders. There is another order on another rolling stock manufacturer. So you may be talking about that. But as far as BML is concerned, there are absolutely no delays. We are on track. In fact, in September, we are planning to roll out the first metro, the first train, which is very much as per plan. And this year, we are supposed to roll out 20 train sets. We are trying our best to roll out 20 train sets, and we will do that. We are on track as far as Bangalore Metro is concerned. As far as other projects are concerned, for example, the Chennai Metro is very, very much on track. The design process is happening very fast. The procurement is happening very fast. It's on track, much before time, I would say. And we expect that the proto which we are supposed to deliver sometime early 2027, we should be able to advance that. So execution, as far as the metro is concerned, metro is going on fine. Absolutely no challenges, because metro we have been doing for the last 20 odd years, more than 20 years. So the supply chain is quite well established.
Okay, in terms of Vande Bharat expectation, I believe there were some concerns there, or is that not the case?
No, Vande Bharat, again, there are no concerns at all. You see, the first proto train has already undergone oscillation trials successfully, has undergone CCRS inspection, and now very shortly it should be rolled out. We are in the process of manufacturing the balance rakes. We have a total order book of 10 train sets, and all these 10 train sets we expect that we'll be able to complete by December or max by January.
Now, in terms of your order book outlook, and you spoke a short while ago about how everything is on track, the order book is robust. Your targeted, your guidance of about 23,000 crores by the end of this financial year, is that on track? What are you expecting to come in the rest of the quarters?
When I say that we should be ending the year at around 22,000 crore, so first we have to reach a total order book of around 28,000 crore, out of which if we execute some 5,000-6,000 crore this year, so we'll end up the year at 22,000 crores. In the next 7 months, I expect at least, some major orders to be finalized for the metro sector. We can expect some more orders from the commuter rail. As far as defense is concerned, we are quite well on track for some orders on the combat engineering segment, which will be finalized by March. As far as mining is concerned, mining and construction, we are looking at certain export orders which should be finalized within the next 2 months, 2 to 3 months. As well as we are trying to have at least one order for the rolling stock, either the metro or the commuter rail. And we are targeting Africa, the Middle East, as well as ASEAN. So any one of these regions, we should get at least one rolling stock order. Of course, the execution will not start immediately. The execution, as I have always maintained, there is a gestation period of at least 18 to 24 months. So execution will take some time, but we will have a beginning as far as the rolling stock exports is concerned. That is what our aim is in the current financial year.
Just one quick question on the 150 basis point margin improvement that has been targeted. How is that going? Is the working capital cost coming down? Is that on track? Anything that you can add there, sir?
You see, let us look at the trend of how the EBITDA has grown over the last few years. It was around 5.5% some 4-5 years back, and now we are at around 13.2%, which is a pretty decent growth. And in the current financial year, when we have targeted 150 basis points, so it is based on two factors. Number one is the first factor is the growth in the top line, and the second factor is a focus on the working capital, so that we are able to reduce our overall working capital by way of focusing on reducing the inventory and reducing the debtors, as well as rationalizing the design of various products, so that there is a saving in material cost. A 1% saving in material cost leads to a huge positive impact on the profitability. Our target this year is to reduce the material cost by at least 2%. So these are the measures that we are taking, and by this we are pretty confident that we will meet the EBITDA aspirations.
Mr. Roy, just one very quick follow-up. Does the GST change have any impact on your procurement costs, etc. at all, or any impact on you as a company?
I don't think so, because it's all input credit. It's a pass through.
Nothing at all. Okay, fine.
GST, we get input
nothing
credit.
On the output either, right? Nothing for you per se. Okay.
No.
Fair call. Okay. Thank you so much, Mr. Roy, and all the best for the quarters ahead. Really appreciate your time.
Thank you.
Sumedh Badwe is joining us, promoter of Bellrise Industries. Thank you so much for joining us, and great to have you on, Mr. Badwe, on NDTV Profit this morning. Let's just talk about the GST impact first, because that's top of mind right now. What is the kind of benefit you see accruing to you?
So it is, obviously the benefit would be in terms of rate reduction, very lucrative to the customers, the OEMs. The overall price obviously goes down, which is a very positive demand booster, and it's great for automotive, great for autos. It's a meaningful reduction, and we believe that it'll drive growth going forward. Obviously, if you look at the two-wheeler industry, it's we had a peak in the pre-COVID FY 19-20ish. And since COVID, this peak hasn't still been reached. I think this could be a great turning point, with the industry now moving towards coming very close to that peak and going forward, increasing even further in terms of the growth. So that's
any kind of margin improvement you see as a result of the kind of demand that's coming in, GST, etc. What is the outlook on margins coming in? Because good set of numbers in Q1, but a slight downtake on margins.
I don't think it is. So this is it'll drive volume. It'll drive better demand. With respect to margin, we're not we're largely in. If you compare to the previous year, we're largely in sync. There's not been much change in our margins. I think that will continue to be stable.
Sumedh, first a bookkeeping question, if I can, before we get to the bigger picture. Because you've repaid so much of the debt through the IPO proceeds, would it be suffice to say that your bottom line performance YOY, right, the growth, will look materially better than what your operational metrics or EBITDA growth or sales growth could look at, because you save on that interest cost? Or is there something I'm missing here?
No, you're absolutely on point. That's perfectly correct. From a PAT perspective, it'll automatically translate to better bottom line, because we have repaid a significant portion of our debt. It was a completely fresh issue. We raised 2150 crores, 2150 crores from the IPO. It was a full fresh issue. 75% of that was going towards debt repayment, which comes to about approximately 1600 crores, which we've already repaid, and the balance is towards general corporate purposes. So that will translate to a meaningful impact on the bottom line. So you're perfectly right on that.
And are you particularly happy with all the recent developments, especially two of them, right? So there are three, right? One is the tariffs and whether that has an impact on exports to that region. But two, the fact that GST cuts, as Tamanna probably spoke to you about, and if that brings about an uptick in sales. But three, also, in one of the con calls, you had mentioned about rare earth shortages could have an impact, but if indeed the India-China relationships, it improves, and if there is a material positives on the rare earth availability, is that something that could help you? Are you already seeing signs of those pressures easing? Because I think Bajaj Auto was on record saying that those rare earth pressures are easing.
Right. I won't be able to comment on any customers, but
no, they were saying for them. I'm wondering if you are experiencing the same thing.
Sure. Fair question. Let's go point by point. With number one, with respect to tariffs, we don't have any meaningful exports to the US, so we're largely shielded from the tariffs, which is a positive. We do export to Europe, to certain premium four-wheeler manufacturers. That is actually looking positive. We largely the UK, but otherwise also overall to the UK, to Europe. The UK FTA, the India-UK FTA is actually very positive in that sense. With respect to our indirect exports through the OEMs that we work with, we have exposure to South America, to Europe, Africa, Southeast Asia, the larger Asian countries. That demand continues to be robust. That was point number one. Point number two, I think, was with respect to GST, which you asked. That obviously, like I also mentioned, very, very positive in terms of driving demand and growth. And we see that there is a meaningful increase in terms of, or at least within the larger public, there's very solid positive environment, especially given the festive season that we're currently in. And number three, I think your question was around, can you repeat what number three was?
Issue, Sumedh. I mean, is that an issue for you as well, for the businesses that you are or may enter in?
So, Rare Earth, actually, given the current positive talks that are currently happening between India and China, that actually will make things significantly easier and will drive EVs further. That is our take from the happenings as they are undergoing right now.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
Hi, thanks so much for joining in to this special broadcast on NDTV Profit. Amidst global trade turmoil, with the US playing hardball and using tariffs as a blunt instrument, the Indian government is focused on a reform agenda that's aimed at bolstering consumption. And the spearhead of that is the rationalization of the goods and services tax. The proposal by the government, which was approved by the group of ministers, is to move to a two-rate regime from the current four-slab structure. 5% and 18% will be the two broad rates. The first reading of this implies a cut in the rates on over 150 goods and services. This will now be debated and hopefully ratified by the GST Council in a meeting that starts on the 3rd of September. On this special show, we're talking about how companies are gearing up for this landmark change and whether India Inc. believes that consumption and therefore growth is on the up and up. Joining me at this moment is B. Thiagarajan, who's the Managing Director of Blue Star, Sridip Nair Kesavan, who's the Chief Executive Officer of Heritage Foods, and Vishal Vittal Kamath, the Executive Director of Kamath Hotels India. Gentlemen, thanks so much for taking the time. And this is hopefully a measure that will bring a smile to all of your faces and certainly your consumers as well. So let me start from the perspective of the consumer durable space, because I think this is something that a lot of people are excited about. Not only air conditioners, but I'm hoping that you can give us perspective for the industry at large, Mr. Thiagarajan. We've spoken in the run-up to this event, and apart from a few inventory-related issues, the worry was about implementation. And the signs are that 22nd of September, at the start of Navratri, is when this will take place. Would you say that, on balance, this is a very positive move?
It is an excellent move. One could have asked for more. The industry had been asking for rationalization of GST, but we never thought that 28% will be brought down to 18% on all the categories. For example, in air conditioners, we have been pitching for at least 5-star air conditioners. You reduce it to 18% or 12%. But the announcement is much more than what we anticipated, and in a price-sensitive market, for example, more than 90% of the buyers are first-time buyers, and 65% plus are from Tier 3, 4, 5 markets. 80% of the models sold are entry-level products, and more than 40% are bought through consumer finance. You can imagine the consumer profile. For them, let us say 1,500 to 2,000 rupee reduction in price is a big thing, and it is going to result in explosive growth.
You know, I will circle back on a couple of things that emerged from what you just said, but I do want to go to Mr. Kesavan as well, because in the space that you play in, the price sensitivity exists, but the price tags are much smaller. So I'm wondering what you anticipate the impact of this shift to be.
Alex, thank you very much for having me on the show. Absolutely, I agree with Mr. Thiagarajan that this is actually a double Diwali gift, as Prime Minister put it. This is a big bonanza. This is something that the economy really needed. And if you look at actually the GDP growth in the last several quarters, we have had fantastic growth rate, but primarily they were all driven by services sector and the government capital expenditure. Even though consumption has been growing, but it has been growing a tad lower than the GDP growth rate. So we really badly need this for the consumption boost. You're absolutely right. In the categories where we operate, the price tags are smaller, but price sensitivity is very high. The biggest beneficiary of the proposed GST revision would be the categories such as ghee, butter, cheese, etc. These are all put together. The size of the organized trade today is about 65,000 crores for these categories put together, in which ghee is the biggest contributor at about 35,000 crores. Now, you know that ghee is actually a household consumption item, but with prices as high as 700 rupees a liter, it's quite natural that people switch to lower priced alternative or edible oils, which are probably imported into the country. Actually, India is a net importer of edible oils. So this will actually have a double effect as far as the economy is concerned. One, it boosts the consumption of our own home produced ghee. Secondly, it'll reduce the burden on imported items such as edible oil, because the more ghee consumption means reduced consumption of other edible oils. Yes. So we expect this to have a significant boost to consumption.
Okay. So I do want to talk about the services space as well. And Mr. Kamath, one of the big talking points, of course, is that 7,500 rupee mark for a hotel booking, where anything below that would move to a lower rate. And this, I think, is a shot in the arm for a sector that is already being spoken about in various circles, about being one of the fastest growing in India, travel and tourism. What, according to you, is the fillip that you will get from a rate reduction here? And do you anticipate that the rates in the space that you play in will now get polarized even further, and that middle range of around 7,000 to 9,000 or 10,000 might just go away?
Namaskar. Nothing will go away. And the thing is that as you have an improvement in the GST, simplification in the GST rates in general, what happens is customer profiles tend to change. Now, as Mr. Tyagarajan said, many a times they are first-time buyers. But what about the second-time buyer? A second-time buyer is the kind of person who will take advantage of the GST rate being reduced and go towards what we call as premiumization. So there would be a saving on one hand, that today if someone was going to a simple restaurant, he still has the urge to spend a certain amount in his mind. Now that the tax is reduced, he might want to go for a better product. So whether it is in our industry or any industry, I do feel in the long run, premiumization which has happened post-COVID will further get a boost because of the rationalization of the GST. In our industry, there will definitely be, see, the 5% segment which was already there for the food industry, for the restaurant part, which is in standalone, that is already having a certain consumption based on a certain demand, festivities, celebration, or need-based dining. But when we look at the higher segments, when we talk about India as a MICE tourism destination, I think the rationalization of this 18% also is critical, because we are losing out our foreigners to Thailand, to Taiwan, to other nations who are having a very friendly GST policy or a taxation policy and a visa policy to help all these people come and increase their forex. So I think along with this 5% shot in the arm, we should get a shot in the 7.5 category also, because ultimately, if the volume of business goes up, the GST collection will go up. And that is something which I hope the government will look at and in the council meeting on even further on this 7.5 thing. See, this 7.5 cap was what logic has never been told. And considering that it's been there from the last 3 years, it does not account into today many of the tier 2 cities also crossing 7.5 because of inflation and demand perspective.
Yeah.
So I think, we look forward to the government bringing this and making our industry more friendly in terms of GST on multi-levels.
Important point that you've raised, right? And the tendency of these slabs to remain unchanged for many years is something to contemplate as well. But I do want to ask both the manufacturers, and I am loosely using that word, sellers of products, whether they anticipate that capacity will have to be added if they think that consumption will get such a boost. Because, and I'll start with you, Mr. Tyagarajan, you are only speaking about, or we are only speaking about GST today, but there's more that is in the works, right? We've spoken about the implications of the IT reform. We've spoken about the monetary policy, which is favorable now and possibly heading even lower. You've got the 8th Pay Commission. So you've got several cylinders that are firing. Do you anticipate that not just you as a company, but the industry as a whole and private sector will have to significantly bolster capacity in the near term?
Of course, yes, it is a golden period. Even without the GST rationalization, some of the consumer durables were on a very high growth path with a CAGR projection of close to 19%. Many other categories, it is between 10 to 15%. Now, GST rationalization combined with the one more thing is the income tax rationalization happened actually. All these put together, it is going to drive consumption growth. Of course, you will have to watch out for a global economic slowdown, whether we will be able to avoid it and protect ourselves as a firewall, that the Indian economy will continue to grow. Irrespective of what is happening in the globe, we have to watch out for that. But otherwise, if I were to take the period FY 26 to FY 31, it is going to be a golden period. There is absolutely no doubt about it.
Mr. Kesavan, you want to weigh in on that?
Yeah, in the long run, I totally agree with you that with consumption increasing at the rate at which we anticipate it to, we will have to ramp up the capex, that we have in our pipeline to accommodate the kind of volumes that's going to come our way. If I could just talk about some numbers, for example, ghee in India, organized trade is roughly around 32 to 35,000 crores. That's the size of the industry per se. And the unorganized or informal economy is close to about 80 to 90,000 crores. We anticipate that it's just my simple estimation that in the next 3 years, the organized industry of ghee could double and become 65,000 crores. That's a CAGR of about 32 to 35%. And if we are probably, the industry is gearing, at this point in time, it's geared to accommodate a growth of about 20 to 25%. So this is close to about 10 or 15% higher rate of growth that we anticipate. So we will naturally have to accommodate that. But that said, I believe that we should also look at certain flip sides that we are, or rather actually watch outs that we may have in the short term. That is, for example, it is still not clear about the inverted GST structure that we have in certain products. And or for example, the inventory. The timing of this particular announcement for our industry is very interesting, because of almost 40 to 50% of our sale happens in the festive period, which is September to November period, as far as ghee and butter is concerned. And the announcement is coming bang in the middle of it. And we'll have to watch out how the inventories pan out. So there might be short-term variations in the kind of sales numbers that we might clock. But in the long term, I totally agree with you that this is a good story as far as capacity building is concerned.
Yeah, important. And we incidentally have spoken to Mr. Tyagarajan in the recent past as well about the inventory issues. And I think what he had stressed very clearly was that sooner the implementation takes place, the better it is, because less pain for the system at large, right? Because the distributors will have to hold inventory and bear certain losses. But I'm just wondering about how you rate this in the larger scheme of things. I'll come to you, Mr. Kamath. Give me a sense of the trend that you've witnessed already so far this year, because the latest aviation trends also seem to suggest that the second quarter was a little soft. So do you anticipate that the rest of the year, given everything that we've seen, including the GST push that we could see now, will be significantly better than what we've seen so far? And if you can put it in numbers, that would be very helpful.
So if you're asking me,
I'm asking Mr. Kamath.
Oh, you're asking me? Oh,
yes.
sorry. Basically, the first quarter rather was a little soft because, as you know, we had Operation Sindoor, which basically did put a pause in the month of May, which is also a crucial month because there's a lot of corporate movement happening. There's a lot of holiday goers also. So certain of our industry sectors did suffer. But if you look at it going forward, now looking at the month of September, October, November, we are looking at very buoyant and robust growth. And regardless of whether the GST deduction happens or not, people will still go out. They will still holiday. They will still get married. It's just that now they'll have a little more money to celebrate and to buy more things. And like I said about the premiumization, we find that there's a value upgradation happening. Today, I will want to buy a branded product like Blue Star or Heritage, go to a Orchid Hotel, as compared to, compromise and buy some, white labeled AC, because my aspiration has improved. If you look at the car segment also, the premium segment cars, if you look at the alcohol segment in the premium with terms of single malts, and in hospitality also, Orchid Hotels are getting more traction than what they would maybe in 2018-19. So there is more demand for brands, and there is a further growth. I think all three of us are unanimous in the India story, in our own citizens, in our consumption story, and the aspiration that carries with it. So, yeah, that's how it works.
Very well put. And I like the statement because it makes a lot of sense, right? There are certain products and services that you will consume irrespective. And of course, if you consume and the rates are lower, there's more money in your hands. So weigh in on that, Mr. Tyagarajan. Do you also see people moving up the value chain sooner rather than later? And what are the implications for companies like yours?
See, in the normal course, for example, 3-star air conditioners, actually that constituted a lot, and some 30% of the total sales used to be 5-star. Now, since the price levels have come down, yes, while 3-star air conditioner buyers, a significant amount of them can migrate to 5-star because it makes business sense for them, because over the life cycle, they are going to save power. Earlier, it was that price band that was restricting them. So obviously it will happen. The second part is someone would have thought of buying one air conditioner for a bedroom. Now they may consider buying two. Little more money they have to spend because the per unit price has come down. They can afford two instead of one. So it will have a phenomenal effect. We have seen for a much smaller reduction. Here we are talking about 28% to 18%. It is historic. It has never happened in India. Even though excise duty and VAT was there.
Certainly. My last question to you, gentlemen, out of 10, I would like you to rate your excitement ahead of the rollout of this landmark GST reform and ahead of the festive season, which I think all of us are hoping is going to be a fantastic one. I'll start with you, Mr. Thagarajan.
Out of 10, 15, I would say.
Okay, you've broken the scale. Let me go to you. Let me go to you next, Mr. Kesavan.
Can I go one up on Mr. Tyagarajan?
Please do so.
Yeah, so yeah, absolutely. I'll also go with 15, 20, 25, whatever. We're also super excited, especially because of the timing. For us, it's very critical. The categories that are going to be impacted are highly salient during festive period. There couldn't have been better timing for such a gift.
And Mr. Kamath?
I just like to say that both as an industry and as a consumer, both we are ecstatic. The reason being that we have suffered through so many challenges with multi-taxes that now with this in simplification, anything happening is 100% satisfaction on our demands in terms of improvement. So I think there can be no debate about this at all, that as a consumer and as industry, we are extremely happy.
Okay, we began with smiles on our faces and we are ending with smiles on our faces. Gentlemen, thank you so much for taking the time.
Thank you.
Thank you very much.
Thank you.
All right, now that is a perspective from three companies and industries that are certainly going to benefit. But let me widen the scope and give you a sense from the associations that represent not just the large companies, but the smaller ones as well. I'm joined now by Sanjay Nair, who's president of ASSOCHAM. I don't need to introduce him or the association that he represents. And I'm also joined by Chandrakant Sarunke, who is the president of SME Chamber of India. Gentlemen, thank you so much for taking the time. Let me start with you, Mr. Nair, because there seems to be a considerable amount of excitement. And my previous panel has rated this 15 plus out of 10 in terms of excitement. I wonder what your initial thoughts are.
Hi, thanks for having me on the show. I would say, yes, there is a fairly high degree of excitement, but I think we have to wait for the details to come out in the next couple of days. I would say at a headline level, the simplification, the rationalization into two duty structures, and I'm hoping very much for clearer compliance, easier compliance, lesser form filling, lesser classification that lead to misclassifications. Anything and everything we can do to simplify the life at least benefits our MSMEs and SMEs big time. Half of them don't even want to, they really get hassled about just the burden of proof, the burden of filings, the periodicity of it. So I think we just need to simplify that. That I think itself will be a huge achievement. Besides, of course, the rate structures being rationalized and coming down in quantum. So that's kind of my headline view.
Mr. Sarunke, please weigh in on this, and thank you so much for taking the time, because ultimately in the context of what is happening on the global stage, and I think we're all cognizant of the fact that a lot of small companies are getting impacted by tariffs, but at the same time, what was just being pointed out about simplification and the ease of the burden for small companies, do you think there is more good than bad that is emerging from this situation?
First of all, I am very much thankful to the Prime Minister and the Honorable Finance Minister to taking the lead to reform the GST structure because it is impacting to the SME sector, particularly for those rural area, those are into manufacturing industry. It was impact on the simplification of the logistics, improve the tax structure, expanded business reach, but also the imposing the challenges such as an increase compliance cost, complexity in the tax filing, cash flow issues from upfront tax payments also. Initial difficulties in adapting to the new system. I think the GST aims to create a single uniform tax system, replacing the multiple indirect taxes, which is leading to the operational efficiency, competitiveness in MSME sector, and especially for the current economic scenario in India as well as the global platform. It will be the beneficial to the SME sector, particularly those are also losing the benefits of the GST. I'm sure that this will enhance the profitability and efficiency amongst the MSME sector, and especially in the manufacturing industry, because India is looking to become a manufacturing hub. And the Honorable Prime Minister has given task to MSME sector to march towards Viksit Bharat. So without SME, India will not grow, and without India, the economic global
important points that you raised. Mr. Nair,